Well, good evening, everybody, and welcome to the September 2024 Investing Roundtable, sponsored by the Better Investing Mid-Michigan chapter and our friends at Manifest Investing. Tonight, we're going to have 4 stocks presented by Kim Butcher. Kim is from Southern Indiana, and she's going to be residing in Florida on a fairly regular basis fairly soon. Kevin Galogly from the Washington, D.C. area. And my good friend Mark Robertson, and Mark and I are both from the middle of Michigan. Mark is down nearer to Detroit than I am, but we live about 45 miles apart from each other. The purpose of the roundtable is to get a group of friends together once a month, make some great stock picks, and create a portfolio that we're going to follow for a reasonable amount of time. Let's get some of the technicalities out of the way really quickly. Mark, if you'd give me just one click, thank you. This is our disclaimer, and you've heard these things so many times that basically I'm going to say everything we talk about is for educational purposes tonight. We do not expect any of you to go out and buy, sell, or hold based on our opinions. We ask you to make your own opinions and do your own homework before you make those opinions. If you'd like copies of tonight's slides, you can send a note to Mark R. at manifestinvesting.com. And if you have any questions that we don't get to this evening, those are both of our email addresses at the bottom of the page. We'd love for you to ask us those questions, and we will get back with you. If you're new to the roundtable and are not a member of our guest list, then there's a email reminder URL right here with that green subscribe next to it. And if you hit that URL, you'll find a real easy box that you can fill in and be added to the Mid-Michigan guest list. All that means is that once a month, we'll remind you that the roundtable is coming up, and we'll give you a link for registration. We hope you decide to stay with us for a little bit of time. We've been doing this for more than 14 years now, and we're very happy that we're able to attract a decent audience and continue to do this. It's fun for us, and our audience tells us it's instructive and fun for them as well. Next slide, if you would, Mark. Here's our performance right now. The market's been doing very, very well, and it's very difficult to keep up with a market that's moving as quickly in an upward direction as the market is. Last month, we were slightly above our 5% goal in beating the market, and this month we're slightly below that goal. The rate of return since we began this program has been 17% for this portfolio. We run a tracking portfolio. It has many, many, many stocks in it, but it includes all of the stocks we've chosen, and some of those positions we, of course, have closed because we feel that the stock is no longer desirable. But over 14 years, that portfolio's returned 17% in the same exact time period with the same ins and outs in cash flow. The Wilshire 5000 has returned 12.4%. Do a subtraction, 17 minus 12.4, and you get our relative return of 4.6%. Our goal since the beginning of this demonstration has been to beat the market by 5 points, and that's represented by that orange line across the graph right there. We've been hovering around that goal now for about half of the time that we've been doing the simulation, so we're very pleased about that. We also have tried to hit an outperformance goal of 55%, and this is based on some work by some of the authors that we've been studying. Tillinghast is one of them. A little bit of gambling thrown in there with Annie Duke as well. Our performance accuracy, in other words, the number of stocks that are currently beating the market, is 46.5%, and our goal is still at 55%, but As long as we can stay near that +5, that's our primary goal, and we're very happy to see the graph is hovering right around where we'd like to be, or better even. Next slide, if you would, Mark. Here's the top 20 holdings in the roundtable portfolio, and there's a little bit of legend up at the top of there. You can read that by saying to yourself 15x, 15 times, and then one stock, that's Cognizant. It was chosen 15 times, and that means that the original investment was $15,000. I think Microsoft, which is our top holding by dollars right now, was chosen 5 times. So that's a $5,000 investment over a couple of different periods, and it's worth over almost $110,000 as of the close of the market yesterday. Our top 20 holdings are down there. One of note is Costco, a great stock, and Costco is a one-time choice. We make the joke every single roundtable that the only mistake we made with Costco is not choosing it more often. You can see that we have quite a few really great performers on the list right there. Most of them of an extremely high quality rating. We do allow a non-core stock to slip in every once in a while. Hence, we've acquired Ardelyx down there in the 4th position down. $38,000 in Ardelyx. I don't know how many times we've chosen it, but 10 times is maybe, this is an editorial now, Mark, maybe 5 times too many. But we have chosen Ardelyx 10 times.
Well, you're just lucky that Kim and I didn't both bring it tonight.
If you want to see the entire portfolio, that's a public link in the upper right-hand corner there. The Manifest Investing link, it's public. You can type that into your computer, and then you can see the entire roundtable tracking portfolio, okay? So with that, I'm going to turn it over to Mark and let him take the next couple of slides in the presentation here.
All right, just a couple of things that we check in. We do check for selling opportunities or triggers for an analysis, and the only ones that come up, and we really only look at a relative strength index greater than 80 as really a trigger. So these are actually down closer to 70. They have been a little bit hot. As you can see, PayPal has recovered pretty nicely here lately. So Kim, you have to be feeling better. You've selected that one a number of times, and it's apparently finding its footing. So
all of the things the new CEO said he was going to do, he's doing.
And so he's doing it. So good stuff. So I don't think that we're in any rush to unload that. And then Kevin, you can take a bow. Your Boot Barn has done very well over the last year and a half, and checking in at an annualized total return of 66%, beating the market by 43. So, people keep asking me why we invite you back. Well, there it is.
Well, thank you. I'll try to do it again tonight.
Okay.
All right.
But I don't think unless you want to take your winnings and run. I mean, Boot Barn does show up on the next list, which is ranked by manifest ranking from lowest to highest. So we will focus in on the ones down at the bottom and see if anything, jumps off the page as a potential sell candidate for any particular reason. Portillo's gets a free pass, so we skip right over that one. Pool, that one is one that we could possibly talk about, and you can see the Boot Barn is in there. But most of those are market matching returns. I don't think there's anything we need to rush out and do at this point. Ken, we might want to make sure the pool is updated and we have an opinion about it in the future, but certainly not an emergency for tonight.
Okay, and we've known Clearfield has been having some problems for quite a while, but it has done a little bit of recovery. Clearfield has. It's still having some issues, but it's not nearly as negative as the outlook looked maybe 6 months ago in that particular stock. So yeah, we also have one of our clearly labeled speculative stocks right in the middle of that list, and that's Luminar Technology. And we agreed to buy that and then ignore it for a long time until it became profitable. So you can see what the ACE numbers are. They're predicting great things. I would take a quarter of that gain in 1 year, and they're predicting sales in the stratosphere. They're up around over 70%. So
very early
those are
stage.
hard numbers to believe, right, Mark?
Well, they're very early stage. So every time they land another contract with a automotive manufacturer, those numbers bump pretty mightily. So if and when they do
that low total return from value line really strikes me there, that 23% at the low side. So it's interesting. But I think you begin to see why Boot Barn is on both lists. It's a great stock, and it's done extremely well, beating the market by, as Mark said, over 40%. But because it's moved so fast and moved so steeply in price, it's taken a lot of the wind out of its sails going forward, and Value Line is predicting low total return at actually negative 11% right now. So while it's not one that I would want to throw out of the portfolio tonight, I would think that we might want to freeze that gain in the next couple of meetings if things don't improve tremendously. Heresy. Okay.
We'll get Kevin to give Value Line a call and get him on track.
Okay.
One last comment. Go ahead, Kevin.
I was going to say, if you look at Boot Barn, look at the sales on that one at 14%. I mean, we were just talking in the bull session to not get rid of companies that are doing really well that are at least 10% on sales. So,
well, I think that was for sales and earnings, though, both.
Oh, now you're putting exemption. Now you're adding exemptions to it.
No. That quote says sales and earnings. So.
All right. Okay.
All right. Kids behave. I will make the point that Ty Hughes has pointed out that Clearfield does seem to be navigating some choppy waters. There was some issues of government reimbursement for some of their rural campaigns, and that does seem to be making progress. So we'll also watch that one. But they won't disappear from this list if they continue to struggle, or if their updates are not strengthening updates. So I don't think we need to do any more administratively. And with that, I think we can get on with the program.
Sounds good. And you put me up first tonight. Well, thank you, Mark. Okay.
Well, you handed in your homework first.
All right. Well, folks, we're going to talk about a company that I doubt if many of you have ever even come across. I hadn't come across it until about a week and a half or 2 weeks ago. But things look really, really high class in a lot of the measurements that I look for in a company. And I'll explain a little bit about it, what it does, show you my analysis, and then ask you to maybe consider it for a second holding in the roundtable. The company is called LPL Financial, and basically they're a brokerage, but they do not serve retail customers like a traditional brokerage. They're the #1 independent broker deal. They're the top. And RIA stands for registered, help me out, Mark.
Investment advisor.
Investment advisor, thank you. Registered investment advisor. And they're also a Fortune 500 company, so they have some size to them. Basically, they serve as a broker to a huge community of investment advisors, both traditional investment advisors, registered IAs, and a lot of smaller clients that classify themselves as businesses and bring it brokerage business as a business, okay? They provide advisors with front of the house, middle of the house, and back office support. And they basically have a whole suite of products to help investment advisors do their job more efficiently and perhaps help their clients make more money. Next slide, if you would, Mark. 23,000 plus advisors, 13,000 of them are independent, 6,300 are independent registered advisors, and another 3,700 of them are institutions, and those 3,700 brokers, advisors are representing about 1,000 institutions. So small houses of financial planning that might have 2 or 3 advisors attached to them. They have $1.5 trillion in assets, so they are by no means a minor player in this field. And this is where, if your advisor is running money and registered with LPL, then this is where your stocks would be domiciled, if you will, and this is where the trading would go on this particular platform. Next slide. This is clearly understandable if you read it. I'm taking snippets from their report, their company research report, company investor advisory report. They have a current one right up on their website, and it's about 50 or 60 slides and extremely informative. I would urge you, if you have any interest at all in this company, that before you do any other work, you at least take the time to read their investor relations report. Remember, of course, who's writing it, but they do a really nice job of explaining the business, explaining the different platforms they have and the services they offer, and then talking about how they have grown in the past and how they plan to grow in the future. Next slide. They see, and so does a number of different source materials, see a growing demand for help in doing investing, for advisory services. And they see that desire, that market growing at about 6% year over year, and they see continued growth out into the 2030s. And they're making the point on the right-hand side that the independent channels, which are the kind of people represented and using the services of LPL, the independent channels seem to be growing faster than some of the more traditional channels that broker advisors have used in the past. Charles Schwab, for example, is a place where a number of investment advisors place themselves and use their services. And those services for the large houses are growing, estimated at about 4%, but they're losing market share. Notice that the independent channels, and this company is on the independent channels, they're growing at 8% compounded annual, and they're representing a bigger and bigger chunk of the market every year that goes by. It's a fact. And I think that this idea that you're seeking help becomes more and more something that generations are looking to do, as the tasks to manage portfolios for a lot of people seem to be overwhelming when they're in their 30s and 40s and 50s. Once you get a little bit older, you begin to think you might be able to do it yourself, but for people that are of a working age and trying to put together retirement accounts, which they weren't doing generations ago, today they're trying to put together retirement accounts and accounts to complement the 401k that they might have. People are looking more and more for people to assist them in making that happen. Next slide. There's an addressable market for these, the folks, the traditional independent brokers, and that's the people that LPLA represents. They make up about $3 trillion of the total addressable market. The registered investment advisors, and LPLA has some of them, they make up about $7 trillion dollars of the addressable market. And the firms, and LPL represents a very small slice of firms as well, less than 1% of the $13 trillion that's made up from LPLA customers. They make up 13 trillion of the market. So it's a huge addressable market. And right now, LPL's market share is about 4% of the entire market. Next slide. I captured this from the value line, and it's a very recent value line because I want to make the point that a lot of the numbers that we usually look to rely on depend on forward forecasts. And value line especially is a valued source for many of us. And value line always makes the point that when an acquisition is in progress or being considered, it's never factored into the analysis until it actually happens. LPL has been very active in the last 5 to 8 years of picking up small independent firms and folding them into their larger firm. Most recently, they inked an agreement to purchase Atria Wealth Solutions. That added another 2,400 advisors and a large number of banks and credit unions. And that deal will close later on this year yet. They're also they're preparing to bring in the wealth management arms of Prudential, and that's a huge group of advisors that work for Prudential right now, and also Wintrust, which is a smaller company than Prudential, but still fairly sizable. So what I'm cautioning you about is that if these acquisitions become complete, they will be folded into the projection numbers for value line, and LPL looks like it's going to be adding a lot of business by acquisition, and value line sees no reason why that acquisitive nature is going to cease in the next 3 or 4 years. They're showing you where their growth potential is coming from on the right, they meaning LPL. And they're talking basically about consolidation in the industry, which is happening quite rapidly. Next slide. Here's the visual analysis. The earnings are moving in the wrong direction for the last couple of quarters. Those are some acquisition costs that are affecting the earnings at that particular time. You'll notice that the last time earnings moved in the wrong direction was during the pandemic. There were some issues for a lot of the financial houses during the pandemic, but after the pandemic, they've moved back on track for great sales growth, which has been relatively consistent for the last 7 or 8 years, and the earnings have moved back to being a nice top on the earnings. I'm registering double-digit growth for sales at about 10% and double-digit growth for earnings at around 14%. This is a very large, medium-sized company or a very, very small, large company, but they are growing rapidly. If you check the historical sales numbers from 2014 onward, you'll notice that they did make a couple of big bumps up, and those reflect large acquisitions during some of those years. Next slide, please. My SSG that used a high PE of 22, which is beneath the last 5-year average, and a low PE of 13, which is also beneath the last 5-year average, results in a buy with a par value on my analysis of around 16%, 15.7 to be exact. I look at the projections from value line of 6 through 17, and I feel I've nestled right inside that that set of numbers pretty well. And Manifest is predicting 17.3. And again, I think my 16 compares very well with the Manifest number. I'm getting validation from two of my more trusted sources. I think my analysis is pretty decent. And all in all, I know that the price on this company took a little bit of hit when the last quarter of earnings came out and the market didn't understand that the earnings shortfall was mainly due to acquisition costs. And therefore, they punished the company a little bit. It's not trading near its high value right now, and I think might be an opportune time to pick up a really high quality company at a slightly depressed price. It's not very depressed, but it's lower than the price that Value Line quotes right now to get all of its numbers from. So with all of that, I'm recommending LPL investment, if you will, and the ticker is LPLA.
Thanks, Ken. Interesting story. I've got to dig in a little bit deeper to figure the size of those acquisitions out. All right. Kim is going to double down or triple down, whatever the number is now, on NICE. So take us away.
Yeah, I presented NICE last month, and I still like it, so I thought I'd present it again tonight. Full disclosure, I do own the stock. As I was making this PowerPoint presentation today, the stock price was at 169.01, and it's closed over 189. I've been looking for something in the AI because everything's going to be AI. So I was looking in that ballpark, and this is the stock I found that looked really interesting for me. They have a CXONE cloud platform. They have about 5 really platforms that they have. The XZone is an open platform that lets the customer engagement for the market, a self-serve for organizations to address their customers' needs. They also have one that's called Evidence Central, a digital evidence management platform for public safety, emergency communications, law enforcement, criminal justice platforms, emergency communications, law enforcement, and criminal justice. They offer XSite, which is a flexible AI cloud platform for financial crime and compliance. Exceed, which is for fraud prevention for small and mid-sized organizations, data intelligence solutions that turn raw data into comprehensive, actionable intelligence, to detect financial crime. So they're everything into AI, which when you look at their value line, you see that they don't have, it's an asset-light business because it's computers. Next slide. So this is the value line that was dated 7/12 of 2024. Mark, can you get your red pen out?
It's out.
Thank you very much. These are Kim's personal preferences out there. So when I look at a value line, I like to look at the projection box over on that left-hand side. I like to have a minimum of the annual total return of 10%. I like to make sure, do they have a legends box up there in the corner? Because it tells us what the cash flow per share is. Some of us look and some of us don't worry about PE, but if you're looking at the PE, notice where it was 15.9 at 168.60, which is only like, what, $2 compared to what we closed today. But the PE was lower at 15.9 than the trailing or the median, so it's like undervalued. But the big one I like, and I always wondered how in the heck did Buffett and Munger sit with a value line book on their lap and flip pages, or according to the books and the articles you read, and that's how they would find a stock. Well, Mark, go ahead and circle that, put an underline where that black dot is underneath. And if you'll notice where the dot lines are, That goes over to the far right-hand side, and that equals to what the stock price projections are of 245 to 365. That's what the far dots are on the right-hand side. So that's where they feel the stock's going to go, in between there. But when you see that solid black dot in the middle of the screen there, yeah, that is saying that the stock price is undervalued of what they think the stock price will be. So by the visual, I mean, we can do our SSG, but I've also kind of gotten a little bit of what can I see by the value line. So these are those things that I like to look for. The midpoint for the stock of 5 years, it will be going up 25. The midpoint for the stock to be going forward of what the stock price is now is 25% higher at 210 compared to what it is at 160 right now. Next slide. Okay, this is the other half of the value line sheet. On the far left-hand side, I did get my red pen to work. Notice you only have 12% of total capitalization, so you've got a low amount of debt. They have rent that are only 22.8 million. That's included in that debt. They have no defined pension plan, because you always need to check that, because that can be some unexpected drain on what their cash flow is. And they've got no preferred stock. So then I go to the right-hand side. We are in 2024 right now, and they think revenues per ADR per share will be $44.05. But then I go looking out to the 5 years at $72.40. Not quite a double, but that's pretty good. But look at the cash flow. 13.35 all the way out to 23.55. Not quite a double, but still going forward, that's a lot. Earnings are a double. $10.60 to $20.25. You can tell that this is an asset-light, non-capital intensive business, because look at the capital spending per ADR share. It's only 60 cents. So what they're paying for are computers and the people who work on the computers. The average shares outstanding, I like to make sure that a company keeps it pretty consistent, because if they keep adding shares, that's dilution. If it's dilution, that's taking away from profit. Because if I'm in there and they keep adding more shares, and any gains that the company will have, they have to share it with more shares, and that means I don't like dilution. If you look at the PE going forward, you can see we're like in 2018, it was 21.9, 26, 34, 40, 27.8, 22, but going out, they think it's going to be 15. If your PE is dropping, that means your stock price is rising. Revenues for 2024, they believe will be 27.30, going out 42. Not quite a double, but their margin, look at that margin, 41%. That's a company who's got a lot of big fat margin. And their net profit margin is 28%. So we talked about how they have little debt, and the return on total capital and shareholder equity is ultimately, as they invest in the business, how is the business doing? And we always want, as an investor, a stock that if the company invests in a new product, in a new widget, or let's say a new computer system here, because that way they can have a new platform for AI, we want to get a good return on our money. And in this case, we have 27% and 30%, all excellent. Next slide. This was from the value line, and they've their research and development part has increased because jump in the head count, but they think the costs are declining as a percentage of their sales, and they still believe that the bottom line will advance 21% into 2024, and the earnings could step up a little bit, like at 19%. So you have a company that could be growing at 21 to 19%, and that's a good amount of growth. It may be neutrally ranked for the next year and a half, but I don't care if I sit on my derriere, and the capital appreciation potential to 2027 to 2029 is attractive. And I like when I can sit on my backside and the stock price just keeps chucking away and going up. Next slide. Now, I've been asked this and been given some emails about this. This is something that I was taught from Ron Brune, and unfortunately, COVID got him. This is what pays bills is cash. So I like to know how the company is doing with their cash, and are they increasing it? So cash flow per share is at $23.55. You subtract their dividends, you subtract their capital spending, you're getting $22.95. Their legend box had the 15, so you multiply that 15 and you get, by cash flow, this stock could be up to $344.25. Now look down at the projection box. They say the low price could be up to $245, but the high price could be $365, and that cash flow is right on the high side of the $365. So by cash flow, I feel that, because that shows me that management is doing what they need to do, and that shows that management is good at their allocation of the money. This is a capital financial strength company of an A. Their price stability is 65, but their growth persistence is 75, and their earnings predictability is 90. Now, this is a company that is in Israel, and I don't believe it's anywhere near where the fighting is, but that could always change. But I'd be willing to take the risk on this personally. Next slide. Now, this is the latest news, and they're getting more and more contracts. More and more contracts is more and more revenue, and each of the time they get a new contract, they're getting those people who sign contracts with them for what? For not just one service, for 2 or 3. And in their investor day, they shared that greater than half of the cloud revenue is coming from services of $1 million or more, which end up being multinational and very complex. And they're buying at least 3 or more solutions off the platform. The transcript said that they expected to have 18% growth. All of these are good. Next slide. I wanted to show you the stock price pulled back and got very undervalued, below 30 in May and June. Why it went down? They had a quarter that the market didn't expect what they had, but it's been coming back. The RSI has come back up to 53. The stock price is back up to 170, and I'll be perfectly thrilled it gets to 344. Next slide. Now, how ironic, but if you go to YouTube and you type in your search engine box at YouTube, the value line 1 stock to buy now, it turns out that NICE was the stock that was presented last week on September the 19th. And when I presented PayPal in January and February, and they're up, I think, about 20%, the stock prices increased 20%. That is the stock that the value line presentation on YouTube was in January. So I kind of have a little confirmation bias that NICE is a good stock to have in your portfolio. Next slide.
Yeah, this is a program that Value Line does once a month, and the experienced analysts actually walk through their tools, and it's a fun program. We're keeping track of it at bull sessions. Go ahead, Kim.
Well, and if anybody's trying to find a stock, I've got a few places I go to, and this is one of the ones I talked about.
Yep.
So here is what Manifest has. The current price, I think your current price is wrong, Mark. It closed at 178.
It's from yesterday.
Okay. But the quality Manifest has of 98 and the par is 20.4. Cha-ching. Next slide. So here's the proof. And they believe, Mark believes that the potential annual return for the par will be 20%. So I'm not going to complain if any company gives me 20% a year. The sales looks up straight and parallel. The price has been pretty well doing that. The returns going up and the quality's going up. All good. Next slide. So what I have found is a low capital intensive business. They've got good management by the way they do their capital allocation because their margins are great and they've got great return on total capital and shareholder equity. They have low debt. The amount of share count or ADRs has pretty well stayed consistent. And this stock can increase the quality of my portfolio as well as the par. Value Line agrees. I like it. So I hope everyone in the audience will like it also. Next slide.
All right, thanks.
Yep, thanks for having me.
Kim, I'm going to unmute Patricia, and she has a question for you, okay?
Sure.
Patricia, you're muted at your end. You'll have to unmute so you can ask your question. And she's taken her hand down, so it must have been an inadvertent hand, Kim. So we're all set then, okay?
Okay, thank you.
No, wait, Patricia is back. Patricia, could you unmute yourself and then you can speak to Kim. And we're having some issues with, there we go. Patricia, you're unmuted. You can speak to Kim now.
I'm just worried about headquarters in Israel. Can you talk more about that, please?
It's headquartered in Israel, and we have to make a choice of what we're going to invest in. And I put my money there. I mean, I recognize the risk that what the fighting is and what's going on there, but
Yeah, the actual office or the city that they're headquartered in is Tel Aviv, and that's kind of remained out of the fracas, the fighting quite a bit. So there's a chance that it could escalate to Tel Aviv, but a number of the companies that we've looked at over the last several months fit that description. So it's a tough call. That can be a reason to avoid it for a while. It certainly has it's kept the stock price suppressed a little bit.
And that's just one of those things. If it's not you don't feel confident in the stock because of the location, that's fine. Don't invest in it. But I thought I found personally for me, it hit the factor of it's an AI stock, it's undervalued, and it has good growth. So I didn't, it's not, I put like 3% in it. So something I could get a little bit of growth, but it improves the par of my whole portfolio. So I like it.
One of the things that we could do, because this has been a multi-time selection for the roundtable, is go in and try to figure out where specifically is their staff located, where are their operations located, because this is truly a global company, and they're not all in Tel Aviv. Also, as part of the consideration.
Okay, we do need to move on to our next presentation, so let's bring up Oddity and our friend Kevin Galogli from the DC chapter. Kevin, it's yours.
Oh, you just stole the thunder. Anyway, what I wanted to do is I wanted to show people how to use one of my clubs. We've been going through the Bink Stock Idea dashboard that's up on Manifest. And we just sort of have been looking for that for a place to be able to find stock. So I want to take you through the steps that we've been doing in our club. So let's go to the next slide. And, I really have to thank Mark for once again giving me a lot of advance notice.
Oh, you're welcome.
There's and you can tell that I only got in here because Cy wanted to see not a playoff baseball game because playoffs begin next week. This was just a game that had playoff implications. And if no one else could be here, could I fill in? And showing how codependent I am, I responded within 16 minutes. So I think both of us need to be able to have something else to do. But this is not going to be a short presentation because I wasn't given enough time. That's my excuse. Next slide.
Oh, gee.
And since we're talking about baseball, for those who don't know it, I grew up outside Chicago, and yes, I'm a White Sox fan. Cubs is a 4-letter word. And we are just about ready. If we lose tonight, they're in rain delay right now. We will be the worst team ever in the history of Major League Baseball. The guy in the lower left-hand side was a fire commissioner when they won the pennant in '59, and he also controlled the civil defense, and he turned that on so people in the city thought that the Russians were attacking. Up in the upper left, we have Disco Demolition. The last time a team forfeited a game was the White Sox. And yeah, we have a clown for an owner in the upper right, so much that he looks like our great unofficial mascot in the lower right-hand corner, Andy the Clown, who used to shout out, "Let's go, you White Sox." So in honor of Andy the Clown, let's keep going. Next slide. So what I did here is, again, this is a public dashboard that anyone can get a hold of. And I just set the date as June 13th because that was actually the date that in which I did it. And everything is set on the value. You can see the red line there. And what we did in our club is we sort of saw, went through some of the ones. And again, we've gone through twice with people picking some to take a look at. But we sort of zeroed in on Pat Donnelly's Oddity. Cy Lynch had ACMR Research, and then Mark had Paycom. And you can sort of see how they all performed. And, as that great American philosopher Marvin Lee Aday said, 2 out of 3 ain't bad. There he is. That's Meatloaf. That was his real name. So 2 out of the 3 presenters actually came up with some pretty good stuff, and we'll take a look at them. Let's go to the next slide. So here's what I sent out to the rest of my club after we looked at it. So we're looking at Oddity, Paycom, and ACM. And, just gives people, just sort of a summary to take a look at what's going on. And here's the thing that struck me is even though these are kind of what we'd call friskier stocks, look in the key metric, the 4th column over, the one in bold, the core score, all of them are pretty decent core scores. Oddity's at 213, Paycom's at 219, ACM is at 247. You can also see the financial health grade that you get in the online tools, 2 or C, and Oddity has a B. B is actually pretty darn good. So keep that in mind when you're going through it. And so the rest of this is you're just going to get my brain droppings because I wasn't really prepared to do this. And I just decided, what the heck, I'll embarrass myself in public. Not the first time I've done that. Next slide. So the other thing what we do, and what I'd like everyone to do now is I like to put this out so everyone can see the visual analysis. I've hidden the name and reordered them. And what I'd like you to do is sort of pick in the order, as first the people in the back room and then the people in the audience, which one do you like 1, 2, and 3? So you'd give, so like, let's say if you liked A first, you'd go A. If you liked B second, that would be B. And then the third one would be C. So you'd go A, B, C. So Mark, which 3, or what order would you like them?
You want me to bias the voting of the audience?
Just pick one.
What?
Just pick one.
Well, I like C the best.
Well, C, what's second?
I think I like B.
And then third is A. So you're CBA. Ken, what do you like?
I'll go BCA.
All right, Kim. And then audience, if you have any, just put it in the chat. Just put it in the chat. Kim, what do you like?
Oh, we might have lost her.
Okay, Matt, you're in the back room. You want to chime in?
Well, Ken took my thing. I'll say I'll agree with Ken. I like B. I like spicy food. BCA.
Okay. All right. And anyone in the audience, have you guys selected what you want in there?
Oh, don't ask them to put it in the question box.
All right. Anyway,
okay, we're getting CBA, CAB, BCA. We're getting all combinations that exist. Okay.
All right. Well, here we go. Let's go to let's click again. So if you want to be able to see company C, we'll see that this is a cheap promotion. We're going to do the DC and Maryland chapter do a monthly webinar on the first Monday where we look at the latest issue of BI. Company C is Paycom. Come and take a look at it, and we'll see if there's a registration. But we're going to go on and look at Company B, and let's go to the next slide. So what I like to do when I'm doing a stock study is I sort of look at this as like it's a scavenger hunt. So if you like puzzles and whodunits, you do this, you can sort of figure it out. This is really a good place for you to do it because you can make money when you're doing it. So who doesn't like a scavenger hunt that gives you money? Next slide. So the problem with Oddity is it's really going to be difficult to evaluate. If you look at the visual analysis in the lower left-hand corner, you can see they have the price bars there, but they're only for 2 years, and they have all that stuff to the left of it, which is, that's when it's not publicly traded. So that stuff is pro forma information that's given to the SEC, and it has to be factually accurate, but it's not audited. If you look also in the recent quarterly figures, there's no analyst consensus estimates on this. If you look over in the center where the red circle is, the number in the member sentiment, only 18 people have looked at this. And then if you look at the big three, sort of Morningstar, CFRA, and Value Line, all of them really don't have any coverage. CFRA has something, but it's in the quantitative report, which means it's just a straight algorithm. So we really have we just have Manifest to go with it. So thank you, Mark, for giving us something to work with. Otherwise, we have almost nothing. Let's go on and let's take a look. Next slide. So this is really outside my comfort zone. I would generally like to be able to look at, I like sort of, as I was telling Mark yesterday, I like the large cap stocks. If you take out the subset, the S&P 100, which are the biggest ones around, and between that and the mid cap, that's sort of my sweet spot. That's what I like for. That's what I look for. I like to look for stuff that has coverage by those big three, one at least, if not two. And I like stuff that has at least 5 years or 10 years worth of stuff. And this just has, 14 months. And then I look for my discount. So Oddity is completely against it. And this is a good time for me to sort of practice and see what we're coming up with. Next slide, please. So Oddity, here it is. It's a small size company. The BI tool says it's technology and software infrastructure. Manifest has it as staples and personal products. One half of it says they're in Israel, but then their headquarters is in New York City. And I'll get into that a little bit more. They're founded in 2013. But what it really does is it operates as an online direct-to-consumer retailer. And what it does is it uses, AI, machine learning to be able to help people pick out consumer products. And that's really what they're trying to do. And again, you see the Manifest rankings over there that look really pretty good. And the financial health grade is really, really good. So, we get this kind of back and forth on, do we go forward or not? Next slide. So let's talk a little bit about direct-to-consumer market. This comes from paddle.com. They're a merchant that takes a look at it, but they're showing the enormous amount of growth that's in direct to consumers. We can talk about, that DoorDash, that stuff when you get from Amazon. My neighbor just was buying, he wanted a drill at Home Depot, and they said free home delivery today. And he did it. And the person who delivered it was a company called Roadie. I don't know if they're national with Home Depot or if they're just local with us, but he got it within like 2 hours without ever having to leave his place. That's all part of the direct consumer. And that's really what Oddity's involved in. Next slide. So they're also trying to do this in cosmetic. But the thing is that they're really focusing on AI and machine learning, but they're really doing it in the form of cosmetics. So you can see here some of the stuff with industry surveys. They have a much higher margin on personal products than you would on bleach and cleaners. You need to have patents and trademarks to be able to protect your stuff. We'll see that they have those things in there as well. Let's go to the next slide. We'll talk a little bit more about that. Here are two sources that I found for this. The growth in the cosmetic area is growing at maybe 9.8%. That's a Fortune article on the right-hand side. And it could get up to $758 billion by 2032. Cadence over on the left-hand side, they're talking about some of the changes. Again, most of this is geared towards women, but the thing is that they're also doing a lot more for men, for also younger folks, older folks, people of different ethnicities. I did a study on Ulta probably about 2 years ago, and they were really showing all the different ways that they could reach out for it. Conversely, what I'm seeing from Oddity is they're not really emphasizing the personal care products on Oddity, and I'll tell you why in just a moment. But everything, but if you look at Ulta, you look at Eyes, Lips, and Face, ELF, they're all talking about their cosmetic stuff. You're not seeing that with Oddity, which took me a long time to sort of wrap my head around. Next slide. So here's their mission statement. It's over on the right-hand side, transforming beauty and wellness through technology. So they're trying to be able to fuse technology with customer service and a beauty product. And so they're doing machine learning and AI. When I talked with Pat Donnelly, who presented this at Bink, made as a recommendation, he called it applied AI. And I thought that was probably one of the best descriptions I heard of it. So what happens is people go on there and they start filling out the user profile. They get these unique profiles and they can create all these different data points. So they have over 40 million people that have created unique profiles. And they have here, they say 1 billion plus data points. I just heard recently that they need to update this because the CEO is now saying there's 2 billion data points. So there's a lot of data that they're gathering on all of this. Next slide. So it's really viewed as a disruptor. In fact, if there's one thing that sort of frustrates with me is that they're using all the sort of corporate buzzwords, AI, machine learning, disruptor, all of those things are in their news releases and stuff. And it's really kind of frustrating because that's not my wheelhouse. But at the same time, if we take a look at this, we can see who's leading in the Groundhog Challenge. And Mark, you were saying that Jim Gallagher, he has both Mama, the pasta thing, and what's the other one that he's just kicked butt with, which is also a big disruptor? Which one was it?
The cellular satellites.
ASTS.
Yeah.
So you can see those things. I'm a little bit more on the skeptical side, but you look at all these buzzwords on that we forge a new way forward. I'm sort of more in the Peter Lynch thing that I'd rather have a company with a dull name doing a dull business that isn't sort of relating with this. So let's click once more. And I'm really more like Clara Peller. I'm more like, where's the beef? And what I found that was really kind of frustrating as I was going through this was I was getting all these buzzwords. I was seeing really fancy stuff on their website, even their IPO filing, the Form F1, they ended up having a slide presentation in there rather than just giving me the meat that you want to take a look for. So it's just like, just give me what I need to do to make an honest evaluation. And that became a little frustrating. Next slide. But they end up making a lot of recent acquisitions. I won't go through all of them, but you can see that they're doing things like they're getting new novel molecules for hair growth and anti-aging ingredients. Those are going to be their 2 new products coming forward. They have machine learning for their algorithms to be able to help improve online shopping experiences. Again, direct to consumer market. They ended up buying some stuff for that. They end up having an app from Ms. B's that talks about how to be able to order their stuff online. They also have this Kazaz, that's actually the app that goes with it. And their CEO claims that they have a low cost of customer acquisition without mentioning the rate. The biggest thing with direct to consumers is they're always trying to gather information about you so that they know how to reach you. That's when they basically, I found this when I was doing Ulta. I clicked a few things on Ulta. Next thing you know, I was having ads following me all around the internet for a month from Ulta Beauty. So one of the people I was listening to when she was doing a review of their products, she was complaining about all the ads were following her from Oddity. Let's go to the next slide. So they have some patents, 17 of them. It doesn't seem like that's a lot. And they really have been filing a lot more. And I would think that a company like this would be building out a lot more patents to take a look at. So that's sort of like, it's good, but is that great? I don't know. Next slide. So here are their main products. So the main one is this iMassage, if I'm saying that right. It started in '78 and then it was relaunched in 2018. I think Oddity bought it out of, I don't know, whatever. It's a $1 billion, almost a $1 billion product line. And the like. And then the other one is Spoiled Child, and it's a hair care product that uses AI and machine learning to help you select stuff for yourself. It started in 2022 and it's already a $100 million product. And they're also talking about how they have strong repurchasing rates. But again, they're not being transparent in my mind by telling us what the rates are. I realize some of it's, proprietary, but you've got to give us a little bit more meat than just using these corporate buzzwords. If you look at brand 3 and 4 in the in that presentation, just to the right of the blonde woman there, those are the 2 new products that I was telling you that are dealing with eczema, and I think it was it acne, I forget, and then another one that was dealing with anti-aging molecules. So they're moving. It's almost like they're starting with these beauty products, but then they're moving into maybe these health things. So again, you think that they would be like Ulta Beauty and they'd be talking about their beauty lines and all the nice things going on. They're talking more about the data that they gather rather than the product that they're doing. And if you look at all those things that they made, those acquisitions, that was right about the time they ended up getting a private equity partner from New York that sort of helped them. And it seemed that's what they sort of got them going with a lot of these things. So prior to 2018, for the first 5 years, I don't know what the heck they were doing, and you really can't tell. At least I can't. Next slide. So here's more about some of the products. You can see the main product, which is the iMarkage. It starts on the lower left-hand side. A lot of stuff on social media. They got a lot of social influencers to put stuff on. Pat Donnelly, when he was talking about this at Bink, he notices when he was talking about the products, all the women in the audience were sort of nodding their head when he was talking about the products, that apparently a lot of people really, really like them. Now, this is clearly not in my wheelhouse, but the fact of the matter, unless I have beard balm, other than that, I'm not going to be using it. And
Kevin?
So, yes.
Il maquillage, and it's a bastardization of the French word maquillage, which means makeup.
There you go. Thank you very much. It's almost as tough to say as Kavula or Glogli.
Anyway, not just a mathematician.
So he's a Frenchman too.
I know it.
So Spoiled Child also does the same stuff. But here's the thing about they have a lot of their stuff. The sales is coming through. Was it El Maquillage? Am I saying it right now, Ken?
Eel, like a fish.
Il Maquillage. My French, you never know that I took French for 4 years. And then over on the right-hand side, that's that app that they're using. I think Kazim is what it's called. And that's one of the ways that they can help you sort of figure out what you want in terms of your product that matches you directly. And then, of course, in their reoccurring stuff to get you on a payment plan, or have a monthly service, just like Ulta Beauty and ELF does. Next slide. So here again, the growth drivers, and I went over some of this already, but they really make a huge movement on Instagram and on social media. Again, because of the fact that they don't have brick and mortar, they sell through things like Walmart and some other big box stores, but most of it is kind of direct to take a look at it. And it's a way to be able to reach people because, again, post-pandemic, this is the way people are doing it. They think they can be more nimble than an Ulta Beauty because of the fact that they don't have brick and mortars to go in with it. If you look over on the right-hand side, I always like to find these trade publications, and I found one of these when I was doing my one on Boot Barn, and this is a site called Retail Drive, but they talk about retail and what's going on. I would never be looking at this because that's not my bailiwick. But I look for this when I'm looking for a retail company. I want to try to find the industry magazines that they talk about and some of the things that are going on. And you can see, again, they're launching in yellow highlights. It's the acne, eczema, and other skin issues are going to be the brands 3 and 4. And then again, McKinsey & Company and a group called the Business of Fashion, they do stuff and they do industry reports. I've used them for a couple other ones that are really kind of interesting, that really sort of help you understand the industry, which I like to do when I'm doing something on something I know nothing about. And they're projecting forecasts in the beauty products alone as being $45 billion. And again, this is a company with $590 million, maybe $690 in sales. Next slide. So here's the growth drivers. Now they're talking about how there's a $600 billion total addressable market. The direct-to-consumer says there's a $6 trillion market in 2022. McKinsey estimates the cosmetic industry will grow by 6%. Fortune said, I think, 9.5. You can see again with, there it is, Oddity has 590 million in sales, so there's a lot of room to grow. But again, they think they can be more nimble than brick and mortars. They can really personalize your foundation. Is the El Maquillage, and again, the videos I saw on it, the women were raving about how great it made their skin look. So Ken, Mark, and I, we've got to put it on our face too.
Absolutely.
Next slide. So looking at the competitors, it's really kind of tough. If you look in the lower left-hand corner, the red highlight, that's from the BI tools, but they have it in the technology field. And while it's technology, I don't think those really match. Mark has, with the household products, it seems to match out a lot better. Our perfume, was that iPerfume? iPar? Interperfume, or Parfume. And Ulta Beauty. The thing is that all three of those companies, they really are beauty. And like I said, most of the stuff I've been seeing about Oddity really talks more about their technology and less about their products. Now, they do have unique URL websites for El Maquillage and for the Spoiled Child. And they actually create separate CEOs for both of them to be able to run their own systems. So it's really kind of hard to find them. But those companies that I'm putting as competitors, Ulta Beauty is like 9 times the size of what Oddity is, just to give you an idea. And the others are equally not as large, but 40% larger and twice as big. Next slide. So from the management discussion, when they went public last year, they talked about how they want to they emphasize the technology part rather than the cosmetic beauty part, and how they want to be a disruptor and change the industry. And again, a lot of the stuff in here are a lot of corporate buzzwords, but they also say that they bring all these new visitors to their website, and they turn those visitors into users by asking them questions about them. They then take that data, because again, they're a data gathering company, and they now have 4 million active customers, and that was as of March last year. So you can just see as this applied AI and stuff is moving on, this really could be a disruptor, but I sort of get tired of all those buzzwords, but you can really sort of see what they're doing here. Next slide. Their finances, the latest ones look really pretty good, to the point where they're even buying back $150 million in shares. But you can take a look at their debt is fairly low. They have it's pretty manageable for what they have. Their free cash flow is growing. The sales are significantly higher. Again, they're talking about their net revenue was up 27%, and on an adjusted basis, it was up 49%. They're giving a full year's outlook in terms of their forecast, because they feel that confident about where they are. And those brand 3 and 4s will probably come in probably about 3 to 5 years. Next slide. So let's talk fraud. So they do have this problem. Kim and I were chatting about this. I was having a hard time finding some things. And when she did a search for it, she found all this class action suit, which I did too. Apparently there were short sellers that felt that they were cheated out of the price at IPO because of stock manipulation. So this started in August. So just recently, I've seen some stuff that was as early as July and March on this one as well of this year. So keep that in mind. And the like. Again, I just sort of feel a little huckstery on some of this, but I also see some really, really good stuff. Next slide. So here's the management. Again, it's a brother-sister that started it. The CEO, the brother, is on top. He's in the dark shirt. And then the woman is obviously his sister. And so they started this with private equity funding. And like I said, they have separate CEOs for their 2 main product lines. 40% of their employees are part of a tech team. They have a high percentage of insider ownership, but I can't see it in the BI tools because they roll it in as an institutional ownership. And I am concerned that they have a 5-person board of directors and 2 of them are the co-founders. So I don't feel like they're really going to be, telling them no. Next slide. So I see Bakul's in the audience, and this question that Mark gave me when we were talking yesterday was pretty concerned. I was like, how do I figure this out? And he quoted Bakul to me, and it's just like, what's the concern, and specifically, what do you look at, and how do you look at it to allay your fears that you will be able to, get this across the finish line? So I went with a SWOT analysis, and you can see there's a lot of good things on the strengths. my weaknesses, I just feel it's a little bit kind of glitchy. This cosmetic area doesn't have a big moat, but the technology business does have a moat. So keep that in mind. Very much a disruptor of the first order and stuff like that. It's a potential to be a multi-bagger or maybe even acquired by someone else where you could make a lot of money, but they have challenges with their patents. We have, again, the SEC complaint that's misleading to investors. And, can the other cosmetic companies, can they adapt a direct to consumers? Yeah, they could, but they seem to have really sort of staked their claim on that. Next slide. So it's really hard to do a SSG with only 1 year worth of data. So that's the reason I have the asterisk next to. You think so, Ken?
I think he agrees.
You do, huh? You go out on the limb on that one?
Put that one on a slide all by itself, okay?
So what I like to do is I just give you all my judgments and you can sort of figure it out. And as I was talking with Pat earlier today, it's like, if I were to go with a 28 sales like we have in Manifest or some of the other things, and I, was even cautious in some of my numbers, I'd get something like a potential price appreciation instead of 163.5 in the center. I'd probably get it like double that. I'd get a total return instead of 21.4. I'd probably get something around 35%. I'd love to get it, but I don't think that's realistic. So to be reasonable, I had to sort of make some judgments on where to go with this to see it. And you really sort of have to, sort of envision where it's going rather than looking at the historic numbers. So it's really, really tough to do this. But yes, I would not recommend trying to do an SSG with 1 year's worth of publicly traded data. Next slide. So, and again, I know Ken, when he always does this, he loves to be able to sit there and do the dance of the seven veils to get you to vote for his stock. I'm going to be able to give you Mark, and Mark promises that if you vote for this, that he'll let you have one of his gently used hot dogs over there, or he'll give you a gift certificate to Portillo's, which he has because he views that as a multi-level marketing company. But here it is. This is a small size explosive growth company. They have strong management metrics, little to no debt, very high margins, room for sales growth. They haven't even touched their total addressable market. And the way I use projected PEs to sort of determine whether it was undervalued or overvalued, and I got it as undervalued. And I think it's a buy up to 41.10. And yesterday it closed at 35.32. It closed at, I think, closed at 35.22. It's a candidate to at least consider purchasing or at least put on your watch list. I think this is a really interesting company, even with all those question marks that I gave to you along the way. So the final slide, next one. What we like to do in digging into the BIs, we like to use the life cycle that's in the handbook. And if you look at this, I think this is clearly in the explosive growth. And I could see this company very easily, if it's not acquired by someone else, the fact that they emphasize the technology rather than the cosmetics, I could see them moving into medical sciences. I could see them moving into a whole range of other things. Look at how Amazon started out as books, and now the strength of Amazon is Amazon Web Services. You could see something equivalent to that. I'm not saying this is the next Amazon. I'm just saying that kind of transition from where they start to where they go could very easily be the case. Or it could also, because it's so young and that it could end up becoming the next, Wang computer. It could just fail. So it's a wide range on that. So that's my presentation.
Oh, good stuff.
And long.
Obviously, an early stage company, but they're dabbling in some interesting areas. Any questions or anything we need to take care of, Ken?
No, but you have about 45 seconds for your presentation.
Okay,
Mark.
well, I will. I'll try to just top that by a couple minutes. Just a quick reminder that we are in the final month of making our next selections for best small companies. We do that during our bull sessions, and we'll have some fun doing that. Here's a quick screen that I ran looking for candidates. I like to use the manifest rank greater than Ivory Soap, 99.44. And it gives you an interesting list. I would draw the audience's attention to the fact that many of these have been featured recently, and there's more. So other companies like Alimentación Couche-Tard is involved in an acquisition that makes it kind of disrupted. EXL is also one that we have looked at. I would stay away from the single-digit growth. I also can't really find it in my heart to invest in some of these with low financial strength, so I kept going. At the bull sessions we run on Tuesdays, every Tuesday, we do have a portfolio that we're attempting to take care of that has 3 somewhat vetted stocks. And I thought, well, maybe I'd like to take a look at one of those. ACM was mentioned by Kevin, and DLocal is another Pat Donnelly stock that was mentioned at the convention. I think Susie may have also mentioned it, and Lamb Weston just appeared in the most recent issue, the current issue of Better Investing Magazine, as the undervalued stock. So those 3 kind of capture my attention. I started with DLocal. Much like Kevin's slides, I'm not going to spend a lot of time on this. This is a company without much of a track record. They are an international mega Visa company doing international payments, most of it, well, almost all of it, outside of the United States. So they're dealing in a couple key areas. We'll look at that. But again, you have the same things that Kevin just talked about. Very difficult to get your arms around the company. It is an exciting opportunity, much like Kevin had to say. They are just at a very tiny fraction of what's possible out there. And they do deal in Latin America, Africa, and the Asia Pacific region. And they are playing with a whole bunch of respected and very well-known companies. So this all gets pretty intriguing. They have an equal amount of buzzwords. So I'll just piggyback on what Kevin had to say about that, and it would make me equally uncomfortable. But at the same time, this is an area of immense potential in terms of being able to make a good buck and serve shareholders well. I then ran into this article that talked about the 10 worst artificial intelligence companies. Scares me a little bit. We do have Poland Capital, which is a company that we respect, that basically threw a little bit of cold water on, saying, hey, it looks kind of interesting, but they got to show us a little bit more. And so I decided to yellow card them and take a step back. I'm calling an audible. Actually calling an audible on the selection. I'm going to go with this one instead. Lamb Weston, again, featured in the Better Investing Magazine, so many of you will have already looked at this one to some extent. Who doesn't like French fries? And yes, Ken, this is a complete accident, but there is a hot dog in that picture. That is completely coincidental, and just thought good, clean fun. What I find interesting about this company is they've got about a 40% share of potato distribution in the United States. McDonald's is a major customer, accounts for about 13% of sales, but they also have other places that they serve. I find it very fascinating that they are attempting to develop products which will be delivered by those 3 companies up at the top. I am particularly intrigued by this one with Domino's here, and these are good. We've actually field tested them. We field tested them and couldn't keep them on the counter at a recent party. So
there's only one thing there, Mark. Yeah, I don't see where you have their sweet potato fries.
Sweet potatoes, I had sweet potato fries within the last couple of days. They are part of the products also. My wife is addicted to sweet potatoes, so that's all good stuff. All right, so here's a look at the company. Again, an increase in quality. We find that the projected annual return is near multi-year highs. That's something that we really like. We're talking about a company growing in the 13%, call it 10, 12, 13%, somewhere along that line. Earnings growth forecasted about 15%. This is a really nice PE, 14.5, generates this projected annual return of about 20. The projected return on value provides strong confirmation based on the capital structure of the company, and you basically end up with a company that has had some challenges that have prevented it from being up straight and parallel. This right here is COVID. This right here is some trouble that they had with an IT project in-house called ERP, Enterprise Resource Planning, that didn't go quite as well. And they also had to do some modernization and refreshing of some of their facilities. They are a global producer of potatoes for the food industry. And so they had to fix some of that. That caused a little bit of the disruption that you see here. That stuff is kind of behind them now. So again, this was due to the prices going crazy and some of the problems that they were having. And I also find it kind of interesting that the long term, it's kind of like a relative strength index, only it's corrected and accounts for volume. It's called the money flow index. That is a really low and attractive low price point in the situation. You can see that Morningstar says they're on sale. So does the analyst consensus, and Value Line also likes it here. It's also reasonably close to their 52-week low price. Here's the Morningstar Bulls and Bears. Yeah, I'll let you read it, but basically the story I would take away, one, I'm impressed by the stuff that they are doing to grow through the companies like Domino's. Two, this is a temporary problem. This is not a permanent problem. It's one that is behind them and should get better and actually support the operation better. In the Better Investing magazine, they talked about being concerned about crop disease and that kind of stuff. Trust me, that's not new to them. And certainly, anything could happen. A dam could break. But again, not new to them, and they are distributed, very geographically distributed. They're not just in the northwest of the United States. I actually grew up across from a potato farm in northwestern Illinois. So they are geographically distributed. It is a commodity industry. I do have some concerns when you start talking about kind of a single product thing, but when that single product is French fries and potatoes, I think you're pretty safe. So with that, I would like to go ahead and agree with the editorial staff at Better Investing and add Lamb Weston to our roundtable tracking portfolio.
And Mark, I'm going to launch the poll, and it's launched, and we're giving everybody a chance to pick the stock that they would like to add an audience position to. We have the four choices: Lamb Weston, that's the potato company; LPL Financial, that's the company that serves investor relations people; NICE, that's a business services company from Israel; and Oddity Tech, which does lots of stuff.
Out of Israel and New York City.
I'm kind of waiting to I'd love to have 85, 90% of you voting, and we're moving very quickly in that direction. We're up to 84% voting. It doesn't cost you anything, folks. Just mark one of these and give us a vote for what you think you'd like to add to the portfolio. You always have that none of the above choice right there.
And just one quick clarification while we're waiting for the votes to come in. Pat Donnelly serves on the stock committee or panel at the National Convention. His day job is a management consultant, so he gets exposure to this type of stuff, and that's why his fascination in companies like Oddity is actually pretty strong. Some of you may Go ahead.
I can't talk it up to 90. I got it up to 87, but I can't talk it up to 90. I'm going to kind of count to 10 in my head and then close the poll. Another half dozen of you vote. We can get that over 90 here, folks. But we're not going to do it, so let's close the poll.
They're being stubborn.
And announce the winners. And Mark, it's been a long time since you've outright won the poll. So we're going to put a second thing for Lamb Weston. Well, maybe it was an appreciation of a very short presentation, Mark. Okay.
Well, it could be, but it's hard to argue with French fries. I mean, I can prove this on the internet that God actually said it's one of the best things he's ever done, inventing the McDonald's French fry, and I can prove that because it's on the internet. So.
Okay, so. I'm going to close that thing, and
we're going to. I beat none of the above.
Yes, you did. Okay.
So barely.
And we're going to close the session out. We're glad you stayed with us, folks, and we'll be back again next month. we put all of these sessions, and we've been putting them up on our YouTube channel for the last 14 years. Any of the old sessions from Roundtable or from our bull sessions, which are every Tuesday afternoon at 2 o'clock, you can find on the Manifest Roundtable YouTube channel. Google any of those words and you'll get there. And we're getting some customers, some traffic on the site, and we appreciate that. Our October Roundtable will be 2 days before Halloween on October 29th. We'll be running a very best small companies program entirely devoted to the small companies on November 2nd, and our November Roundtable is November 26th. So with that, I'd like to thank very much. A big thank you to Matt, who's been in the back room, Matt Spielman from the Houston chapter, who's been back there answering questions when they needed answering. And Kim, as always, thank you so much for helping us out. Kevin, I know that we didn't give you a whole lot of time, but you came through with a very interesting presentation. Thank you so much. And Mark, you know how thankful we are that you help us out on a regular basis. So with that, I'm going to say good night to everybody, and have a great rest of, well, summer's over now. We're into the fall, so have a great fall for everybody.
And we again
Good night,
extend that invitation to you participate in our bull sessions as we lock down the best small companies over these next few weeks.
Absolutely.
Thanks, everybody.
Good night, all.